Hello friends, today we are going to do a question from the past paper asked in November 2018 from contract costing. The question states that Messrs. SD Private Limited commenced a contract on 1st July 2017 and the company closes its account for the year on 31st March every year. The following information are given: material issued, direct wages, prepaid wages, administrative charges, supervisor expenses, machinery. The contract price was 42 lakhs. Two-thirds of the contract was completed, and the architect issued certificate covering 50% of the contract price, and the contractor has been paid 15.75 lakhs on account. We have to calculate a contract. We have to prepare a contract account and calculate the notional profit or loss as on 31st March 2018. So as we have discussed in our last video, the contract account is somewhat similar to a profit and loss account. On the credit side, we have all the revenues and the closing stock, and on the debit side, we have the opening stock and the expenses. The second difference is that in case of PL account, we used to only write the depreciation on the debit side, but in case of contract costing, we consider machinery also as a kind of inventory, and therefore on purchases, we debit the contract account and the closing value of the machinery after charging depreciation is on the credit side. So let us begin with the question. So we are going to prepare the contract account for the year ended 31st March 2018. Particulars, amount, particulars and amount. It is very important to give a heading to all your accounts and statements. So first, it is given that the material issued was 9,48,000. So just as in PL account, we debit all the show all the expenses on the debit side, that is on the left side of the account. So are we going to do in contract account as well. So to material issued, ₹9,48,000. Then we have the direct wages paid. So to direct wages, now 4,57,200 has been paid. However, 1,08,000 is prepaid direct wages. That is, this amount has been paid in advance. It does not relate to the year 2017-18. That's why it will not be recorded in the contract account, because contract account is prepared on the basis of accruals, that is only the expenses or income relating to that particular period is recorded in the contract account. So we are going to subtract 1,08,000. So the direct wages we are going to recognize in the contract account is 3,49,200. Next we have administration charges. So to administration charges, we have 1,20,000. Next adjustment given in the question is a supervisor who is paid 50,000 per month has devoted two-thirds of his time to this contract. So to supervisor's salary, the per month salary is 50,000. This contract was started on 1st July 2017 and we are closing the books on 31st March 2018. Therefore, the supervisor has worked on this contract for 9 months, that is from July to March. Therefore, only 9 months' salary will be considered. Plus, it is mentioned that he has devoted only two-thirds of his time to the contract. That so, we are going to account only for two-thirds of his total salary for these 9 months. This is because one-third of his time he had devoted to some other work or some other contract. Therefore, we cannot charge that portion of expense to this contract. So, the supervisor's salary comes to be 50,000 into 9 into 2 by 3, giving us 3 lakh rupees. Now, the next adjustment given in the question is a plant costing 7,85,270 has been on site for 185 days. Its working life is 9 years and scrap value of 75,000. Now, this contract was commenced in the middle of the year, so a plant was brought in the site costing rupees 7,85,000, just as we do with an inventory. That is, when we purchase a stock, we show it on the debit side of the PL account. Same will be the treatment with this plant. So, two machine 7,85,270. Now, in case of inventory, what we do is that when we purchase the stock, we record it on the debit side of the PL account. Then we value the closing stock and show it on the credit side. Similarly, we are going to record the value of the machinery on. So let us first calculate the depreciation on this machinery. So working note 1, the written down value of the machine, the depreciation will be the cost of the machine, that is 7,85,270, minus the scrap value, which is 75,000, divided by 9 years into, it is given in the question that the machinery was on site for only 185 days, so the depreciation will be charged proportionate. Therefore, 185 divided by 365, so we get the figure as 7,85,270 minus 75,000 divided by 9 into 185 divided by 365, which amounts to 40,000 rupees. Therefore, the value of machine as on 31st March 2018 is 7,85,270 minus 40,000, which is 7,45,270. So we are going to record this on the credit side by machinery 7,45,270. Wherever you have a working note for any figure, always mention it in the main solution. So working note 1. So if we see that we have a machine on the debit side of 7,85,000 and on the credit side of 7,45,000, hence we have a net debit of 40,000, which is the depreciation for the year. So all the six adjustments mentioned in the question has been given effect to. Next, it is given that the contract price is 42 lakhs. Okay, so now that we have recorded all the expenses, let us calculate the works cost. So, by works cost, which is the balancing figure, we have so the total of the debit side is 31 lakh 2,470. The administrative charges was 7 lakh 20,000. I've written as 1 lakh 20,000, so you can correct that. So balancing both sides, we have the total works cost is 23 lakhs 57,200 rupees. So two works cost, so far contract account is more or less similar to your PL account. Now we come to recognizing the income so that we can calculate the notional profit. Now your income or the credit side will comprise of two things. First is the value of work certified and next is the cost of work uncertified. So as we all know that work certified means that suppose just say in this question it is given that the architect two-thirds of the contract was completed. However, the architect issued certificate costing covering only 50% of the contract price. That is, only 50% of the total contract is certified as completed by the architect. So we can recognize the sales price, contract price, only up to 50% of its amount, because the other one third of the work which is not yet been certified, we cannot recognize it, the sales price to that percentage. So the value of work certified by value of work certified will be 50% of the contract price, which turns out to be 21 lakh rupees. So work certified is always calculated as a percentage of the contract price, whereas a work uncertified is always valued at cost. We do not recognize the sales price to the percentage. It has not yet been certified. So we'll have to calculate the cost of work uncertified. So working note 2, cost of work uncertified. We have completed two-thirds of the work and the total cost incurred was 23 lakh 57,200. So the cost of two-thirds of the contract is 23 lakh 57,200. So the cost of 100% of contract will be by way of unitary method 23 lakh 57,200 into 3 by 2, which comes out to be 36 lakh 35,800. But so the cost of 50% of the contract is 36, 35, 800 divided by 2, which is 17 lakh 67,900. So we have incurred 17 lakh 67,900 to complete 50% of the contract. This value has been certified, so we have recognized 21 lakh for this portion. Therefore, we have a notional profit. So the cost of one third of the contract that has not yet been certified will be 23 lakh 57,200 is the total cost incurred till date, and 17 lakh 67,000 900 worth of contract has been certified. So the portion of cost which is uncertified is 5,89,300 rupees. So by cost of work uncertified, working note 2, we get 5,89,300 rupees. So now to balance the count to costing PL, notional profit, we have total on the credit side 26,89,300. So we get a notional profit of 3,32,100 rupees. If you see, the notional profit is equal to the value of work certified of 50% of 21 lakh minus the cost of the 50% of the contract which we had calculated earlier. So 21 lakh minus 17 lakh 67,900 will give us a profit of 3 lakh 32,100. So in this question, two or three points are important to note. First is that direct wages for the year will not be 4,57,200. We have to subtract the prepaid expenses because it does not relate to this year. Second, supervisor's salary will be taken only for 9 months since the contract was started in July, and only two-thirds will be recognized because he had spent only two-thirds of his time over here. Depreciation on the machinery will not be taken for 9 months. It will be taken for only 185 days because it is mentioned in the question that the machine was used for only 185 days. Next, work certified is always measured, valued as a percentage of the total contract price, whereas work uncertified is recorded at costs. So be careful with the wordings. By value of work certified, whereas in case of one work uncertified, it is a cost. Finally, the notional profit is equal to uh, the value of work certified and the cost of that percentage of work certified. Hope this sum is clear to you. If you have any doubt, you can post them in the comment section below. If you like the video, do share and subscribe. Thank you.